Okay, hi guys. I'm just gonna do this session is a very short one. I just want to just explain something about the movement of Euro Aussie. It's um it's really sweet if you can see all of the blue lines, how price action just been respecting that blue line. I'm looking at it from the daily now. If I drop down to the 4 hour, just look at this. Started here. You see, this was a key level a price was operating in, another key level. Now, if you go into the future, you will see how price kept respecting those levels. Every time price, for instance, this level, first of all, this level, this was a key level because every time price got to that level, it bounced, got to that level, bounced, got to that level, it bounced. And then what happened when it finally broke it? What did it do? Came back, retested, and then dropped. You know, eventually what happened, it was able to break above it again. What did you see price do? Left that level, created another level here, got here, came back and retested that level, and then went to the moon, created this level. What did you see price do? Came back into that zone, immediately came back into that zone. What did you see? It went to the moon. Now just watch this. Price kept going. It wasn't able to break this high, you know. What did you see it do? It came back to that level it touched before bouncing. And what did you see it do again? It bounced again. And then eventually still struggling on that level, at that level, this first level here. Eventually came down and which is where we caught that move. And then at that level, what did you see? A reaction here, the same level it kept touching and bouncing. So it broke it, retested, and then dropped. Came back to this level, broke this level. Why this level? Because it's been there before. If I take you back now, you would see it. That's the same level it broke and retested and bounced off. That same level, that's the exact same thing it did here. Came back to it. What did you see? To break it, retested, came back and retested it, and then dropped, and then kept dropping. And where did it drop to? It dropped to that first level on the left. Let me see if I can bring it out. So where did it get to before having that reaction? That place, that key level it had, it bounced off. That is where this reaction is happening right now. So that's telling us that this particular pair, Euro odd, respects price action. Actually, it really respects levels. So this may be one pair you want to put into your trading plan to also look at. I love price action, and I like to see pairs like this that respect price action. So right now, for me, I can't really tell what price is going to do because it is at a key level. It could break to the downside, it could break, continue to the upside, it could bounce off here because it did the same thing here. It came there, broke it, retested and bounced. Look at that. Broke it, retested and then bounced. It could do the same thing here, come back, retest, like you can see, and then bounce off. That can happen, but also it is possible for it to break that level because of that strong impulse coming in. It means that the bears are really, really dominating the market. So it may be strong enough to be able to break it, but what I just wanted to point out is that this area is a very key area in terms when it has, I mean, as having something to do with your risk to reward ratio. What do I mean by that? So it means if you do take a trade from this level, if you decide to take a trade from this level, okay, hold on. Before then, I think I was trying to point something out here. What I was really expecting you guys to see. Now, you see this small channel here. Some people might say the people that didn't put this line here might say, okay, it's a channel, it's going to break out, and once it breaks out and retest, I'm just going to take a trade. But it's a risky place to take a trade. Why? Because there's a key level here. What's the how many pips would you be trying to get if you decide to take a trade because of this break and retest? That's only 27 pips. You could, if you're not looking at this, you could be stopped out. You could be stopped out because you're expecting this to be a retest, and then you jump in on the sell, and then expecting this to go all the way down. But because this is a key level, you can't do that. Just within this level, for me, I would let price to do whatever it needs to do. All of this, I'm not going to take any trade at this level because it is at a key level. Some of you wonder why I tend to win most of my trades. I sit down on my hand when I see something like this happening. It's in a channel. We love channels. We love to see breakouts of channels, and retest. Some people may jump in on this, but they would ignore the fact that it's at a key level. That's why your higher time frames are very important. You can't avoid looking at your higher time frame. You can't just trade on the smaller time frame. You need to look at this so it gives you the big picture of what is happening, in the market. So right now, this is where price is at. I would not do anything right now, unless of course I just want to take a risky jump into the market. Now, if I do decide to jump in here, the only thing I'll be doing here will be probably maybe like a buy. I can decide to do a buy, at this point, probably like a buy, expecting price to keep going up, and then it means my stop loss is going to be somewhere around here, very tight. So it means if it doesn't go my way, I'd lose that trip. I'll probably lose it just a few pips. And if it goes my way, my risk reward ratio would be really good because I'm only risking a few pips here to make probably all of this move to the upside if that does happen. For a sell, I wouldn't even decide to take this trade yet because it hasn't broken below my let me see that on the higher time frame. Look at that. Where prices are. This is the level. So it needs to break below this level, this low that it created here. And then if it breaks below that and I see a retest, then and only then, without say, I want to start trading the downside. Right now, I don't have any business trading the downside. There's no confirmation for me to take this down move. Yeah, this is the next journey down if it does break this level. Yep. So at this level, every seller, I'll expect you to sit on your hand just to see what price is going to do. If it breaks below this strong level, then and only then can you. But then, even though it does that, you don't jump in. You wait to get a confirmation, either an engulfing candle, a retest of that level, simple pattern, maybe like an ascending wedge or something, or a descending triangle or whatever you want to call it. But just look for something that confirms that this is a valid downside. Then you can take it. There's no crime in waiting. But you get a good risk to reward if you enter a trade at this level, because this will be your risk somewhere around here, and this whole length will be your reward. This whole length. Initially I had this, but I remember there's one obstruction here, so you may get there before finally getting down here. So for me, I'm looking at the buys right now. I'm looking for opportunity to take this market for buy if it breaks above. Look at where I have I'm not trading all of this. I'm just waiting for this to break and retest, maybe a small buy, but my major buy zone will be at this area. Why? Because the previous high, I would say, has been broken. This hasn't broken these highs yet. None of these highs has been broken. If it breaks this high, a good confirmation. If it breaks this high, even a better confirmation. If it breaks this high, even a better confirmation for me to keep looking at the buy side. But right now, a sell would be for price to break below this and retest that level. So right now, I think Deep posted an inverted, head and shoulder somewhere on the platform. That may be something for you to look at as well. So this is the right shoulder. This is the massive head, but this is just too big, So this may eventually go back up. It may go back up to this. Let me use automation instead so I can clean it. It may go back to this level, probably to that level, or to this level. Sorry. We go back to this level, the previous peak of that left shoulder. It may do that, but yeah, whatever happens, wherever it gets to, just look for your entry from there, and put your stop loss in place because it's definitely going to come down. But if that doesn't happen, then this is what you're going to see, a retest and then a drop. Yep. So, but ensure that you get a good confirmation before you jump into the trade. So I just wanted to just draw your attention to the fact that this is a very good pair to look at if you want to, for price action, because you can see how it respected those levels that it created. Every time price got to those levels, it reacted. And the fact that, yeah, this may not be a trade for you to jump in on a sell yet because there's no confirmation. It is at a key level, you know, because if it broke out of a channel doesn't mean you should jump in to sell it. Just wait for it to eventually break out of this 1.56140 level and then wait for a retest, but for your buys to get an early buy, wait for it to break this high here, and then maybe you can put but it means your stop loss would be somewhere here, maybe somewhere around here, and then your TP, first TP, but that's a one-to-one risk to reward, which is not very good, So yeah, a better one will be at this level. A better risk to reward ratio will be at this level, So yep, that's just what I wanted you guys to see. I would send out analysis as they occur. Right now, I'm leaving the house right now, but I'm going to carry my computer. If I see anything in the market that is lovely, I'm going to send it to us. So have a fantastic trading day. Bye bye.